When asked in October which one factor affects their investment plans today, the highest percentage of respondents, 18%, answered stock market conditions. In comparison, 25% of Millionaire investors also answered stock market conditions. But among affluent investors overall, this was a significant drop from July when the number was 37% when this question was last asked. However, affluent investors say they are keeping an increasingly watchful eye on the economic environment and the political climate. October was an especially fractious month in Washington, D.C., with lawmakers unable to fashion a bipartisan solution that would have averted the government shutdown. The shutdown and subsequent finger-pointing was coupled with the escalating debates over the debt ceiling and the attempts to defund the Affordable Care Act. Several national polls found American consumers decidedly downbeat about the direction of the economy and the government's handling or not handling of it. 16% of affluent investors surveyed said that the economic environment is the one factor most affecting their investment plans today, up from 13% 3 months ago. Similarly, 7% said that the political climate is affecting their investment plans, up from 3% since July. Another factor with an increasing impact on affluent investment plans is household income, which edged upward from 4% 3 months ago to 8% in October. After surging in September to its highest level in more than 2.5 years, the Spectrem Affluent Household Outlook plunged 13.4 points to 5.1, a near repeat of the nearly 13-point drop from July 2013 to August. The Outlook is a monthly survey of affluent attitudes towards 4 financial factors that impact their daily lives. The October survey was fielded in the midst of the 13-day government shutdown and the contentious partisan debt ceiling debate. These events took a toll on investor confidence. The economy took the biggest hit, dropping 19.59 points to negative 8.49, a 10-month low, and the largest month-to-month drop since last August. Household assets dropped 14.37 points to 20. This was the largest month-to-month decrease in a year. Company health fell 12.27 points to 1.05, also the largest month-to-month drop since November of 2012. The decrease in household income was a little less severe, 5.58 points to 7.84. Non-millionaire investors seem to be the most shaken by recent events in Washington. The non-millionaire outlook fell 8.46 points to negative 13.72, an 8-month low, and the third consecutive month the non-millionaire outlook has been in negative territory. This last occurred between November of 2012 and January of 2013. As we look forward to the final 2 months of 2013, we will be monitoring a number of key stories that will surely have an impact on investor sentiment as we head into the new year. Not only will the continued issues with the Affordable Care Act remain a divisive issue, but on the 15th of November, we will have arguably the hottest IPO since Facebook, as Twitter will be planning to trade publicly for the first time on that day. Experts see the shares being priced somewhere in the $17 to $20 range, a lower range than many analysts had expected. As markets continue to move higher, with both the Dow Jones Industrial Average and the S&P 500 making new all-time highs on a seemingly weekly basis, can we anticipate even more gains through the end of Q4? Or is it going to be time for the market to correct itself back to the downside? As always, thank you very much for listening. I'm Randy Wostratzky with the Spectrem Group. Have a great day.